Hello everybody, hope that you are doing very well and welcome to this evening's Contenders live stream. Where I'm going to be going over, it was a bit of a funny one last week. Obviously we had ultra kind of distractions, I suppose, with the Bitcoin move. And I don't know whether it was that or whether people just struggle to understand the concept of imbalances, I suppose. But we had never received so many questions after a live stream. I personally think it was partly maybe because of the move and people couldn't concentrate. I'm not sure, but nevertheless, there were so many questions about imbalances. It warranted a kind of a part two. So tonight is kind of a part two on imbalances, because truly imbalances are actually really like massively important to how we trade. So it's really important that you understand. So I'm happy to do a part two on it because of how important it is. But yeah, all I'd say is in today's live stream, if you just make sure you turn off all distractions, so straight away put down your phone, turn off the charts and turn off all distractions tonight and just purely concentrate, give all your attention to tonight's live stream, because the information that I'm going to give you is just massively crucial. And if you're properly taking this seriously, if you actually want to become a professional trader, you need to give this all your attention, because the information is just, it's going to be great. So I'm going to be going over imbalances, more of it in like a live sort of scenario. So we're going to be loading up the charts and going through, I guess it's kind of like a practical theory lesson today. So obviously last week, I just recommend you watch the theory side of it again. And today I'm going to be giving like a sort of practical lesson. Last week was theory, and today I'm not going to do the theory side of things. I'm going to go over the actual, I'm going to be going over, what's the word I'm looking for? Yeah, the real side of things. So we're just going to go into the chart, find out examples, and really I'll try and commentate if we get a move, like what we're looking at, what we're waiting for. So it makes sense to everybody, really. So I hope that will eliminate a lot of the questions. What I want to start with, obviously, though, is Ethereum chart of the week. So let's start with ETH chart of the week, what I was looking at here. Okay, and it's actually a really simple setup. Okay, it is a really simple setup. Just going to take a drink. Cool, so let's begin then. So what we have going on is... Oh, sorry, let me actually show you what I was looking at. So yeah, this was my Ethereum chart of the week. I guess I was always start with this disclaimer. If you just want to make sure you read this disclaimer. Everything in tonight's stream is obviously not financial advice and just educational entertainment purposes purely. Okay, so make sure you read all these points and let's go then. So Ethereum chart of the week, this is what I'm waiting for on Ethereum basically. I'm actually waiting for a claim of this monthly, and I'm going to show you a little bit of how we look for how we look for the monthly and the weekly on top of each other, really, because this is not as a nice example. But yeah, basically this is what I'm waiting for on ETH, a claim of this higher level. Okay, and then basically I'm going to look for it up to the weekly, and what you have to remember is that this could have a strong correlation with Bitcoin. So I think it's really crucial, really important to look at what ETH is doing here, because it could potentially give a really big heads up on Bitcoin. Okay, so yeah, I think this is going to be a really important setup. Obviously, just so I can show you what I meant by the levels really quickly. Obviously, here you have your monthly. Okay, could potentially put a monthly here, but it's so close to weekly. I've actually, in fact, I probably would do it like this. Okay, the monthly there, the monthly there, the monthly there, and then obviously we have a few weekly levels with our monthly up above. But what I want to highlight to you is the way that you look at this weekly here. Okay, and we obviously have the weekly right above you here. So this is obviously a weekly level, and some people might be wondering, why haven't I got the weekly mark there? Why have I got the monthly kept? The reason is pretty simple for me. Okay, I don't have the weekly marks because it's so close to the firstly it's so close to the monthly, and I prefer to really keep the higher term time frame. Secondly, we can see the respect that this monthly's had. Okay, so literally the wick there, and then this one was the exact sat. So that was the exact sat off the monthly, before the rejection. The reason why I've got the setup looking like this, slightly above that, although I don't have it marked on the chart, and this is the thing, although I don't have both marked on the chart, I obviously am aware that they're both there, if that makes sense. So I know that the weekly's there even though I don't have it marked. That's obviously pretty important, but nevertheless, what I'm kind of envisaging, or what I feel is probably the most likely, is that you get actually a move like this. So whether we go sideways, whether this materializes into nothing, but what I feel is the most likely is that you probably, go a bit more here, and then you do something like this, where you actually take the monthly and then get a retrace like this. So I would expect us to actually do, if I'm honest, I would expect something similar to this, where you get above the monthly and then you actually run into the weekly and swing failure pattern to high before putting in a higher low, potentially before we get that run up to the weekly. That's why I've got this set up like this, but I've got no bids preset. Okay, it's all just, it's going to be a trade that I have an alert for, and it's one that I'll take in the moment. Okay, and this is going to be like a really prime example. If you know, I actually don't ever check this to like order flow or anything like this on the altcoins. I must admit I'm not a heavy altcoin trader, but I mean, you know, let's pretend this was Bitcoin, for example. Well, in this sort of example, when we're coming up and taking those highs, this is exactly when I'll be looking for the imbalances, and that's what I'm covering tonight, obviously. But, you know, these are the sort of things I'll be looking for. As we take the highs, we're going to be looking at volume, open interest statistics. Obviously, you need to be on futures for this, but you know, these are the sort of statistics that we look for upon taking these highs. But I must admit, I feel the most likely is kind of this, that we will hit the weekly, pull back slightly, which I think will you know, kind of just scare the market a little bit, thinking that it was a swing failure pattern before I would expect it to put in a higher low before we, you know, go up to that weekly. But yeah, so that's kind of what I'm looking at, what I'm expecting, and the way that I'm approaching this. And I truly feel that this could give a really big, could potentially, okay, so obviously only a potential, that we wouldn't trade off of this solely, obviously, but nevertheless, I feel that this could potentially give a nice heads up on Bitcoin. If we start to break upwards here on ETH, okay, so if ETH does start to break up out of this range, so obviously no guarantee, but it would give strength to the idea that we could potentially break up on Bitcoin. Okay, it's only going to be bullish. Okay, Ethereum breaking up is only going to be bullish for Bitcoin. I can't see a scenario where ETH breaking up would say, all right, that means that Bitcoin's going to break down, for example. Okay, obviously at the moment we have this kind of ascending triangle type structure going on, okay, with the higher lows into kind of this like flat top. So you have this like ascending triangle. Let me just hide everything really quickly so you can see. So you obviously have this ascending type of triangles type structure, okay, and you know, one is just aware of that pattern at the moment, really nothing else. But yeah, so that's Ethereum chart of the week, and I think you all got to be really aware of that because of the massive implications that it will have across the whole of the market. Obviously, as you all know, if Ethereum breaks up, then the altcoins are generally going to perform really well, and so this is like when I personally am more aggressive on altcoins. Okay, so if I see Ethereum doing really well, I'll be much more aggressive on alts. As you'll know, you probably will know, over the last few weeks, you know, I've hardly traded alts, period. Like I've really given them a massive I hardly even look at them, if I'm honest, and this is partly to do with Ethereum just going sideways. Like, for me to trade altcoins, I want to see like it was, you know, back a few weeks ago before we ran into resistance on ETH. Obviously, when we were trading it from, you know, literally made that trade from the low of the monthly to the high of the monthly. Okay, that was a lovely trade. And during this time, I'm a bit more like aggressive on altcoins. But when Ethereum like hits resistance like this and goes sideways, you know, I'm going to generally be less aggressive on altcoins. And that's one of the reasons why, you know, I cleared out my altcoin list and hardly look at them anymore. It's because, you know, I want to see Ethereum strength to really get aggressive on altcoins. It's as simple as that. So yeah, that's Ethereum chart of the week. Going to take a drink and then we will start. Okay, so imbalances. So last week, I think a lot of people had I think there was a really big confusion of how do you actually approach the imbalances? Like, what situation are you looking for them? What's classed as low volume? What's classed as high volume? These were the majority of the questions that we were having. And then how to differentiate between a breakout with imbalances and then a swing failure pattern that gets imbalances but turns into a swing failure pattern. These are the most common, excuse me, these were the most common questions. So I'm going to try and really focus on those and giving some like really nice, hopefully, examples that we can be looking out for. So with that said, obviously the website that we like to use for this, you know, not requirement by any stretch of the means. Like, I personally really like Exo charts. Again, you could be on Sierra charts, Trading Technologies, tensor charts. Okay, so there's a lot of websites for this, but as you know, I kind of like Exo charts, but they're all doing the same job. Obviously you can't do this on TradingView. So, you know, a few things that we'll be looking at then. So if you remember, cast your thoughts back to last week. Okay, so this is obviously really important. The three type of real main things that we're looking at with the imbalances. Okay, there's obviously I'm not going to go through all the slides, but the main things we're looking for is obviously absorption. And one could say this is a potential example that we have right now of bullish absorption at the lows. So we're going to either be looking for absorption, okay, which is a lot of sell orders and prices not really moving down. And this is a perfect example of what is happening right now on Bitcoin. Okay, then we obviously are looking for kind of these swing failure patterns where we get, quick swing failure at a low with trapped traders. Okay, and then we were obviously looking at the stacks, okay, where you get these stacked, these stacked imbalances where they act as support resistances. So those were the three kind of main, ways that we're looking at this. So with that in mind, let's go over a few examples that we have here. So I like to go, we're going to use the real price action as it's happening, over the last 24 hours. So if we go on to the 15-minute chart, and I personally really like the 15-minute chart. Another question that I was asked was, what time frame do I look at this on? Okay, the answer is not like, or like, what's the best time frame should I be looking at? There's not really an easy way to answer what's the best time frame, because obviously a time frame is so dependent on every single trader. If you're a swing trader and I say, the best time frame to look at this is the 15-minute chart, you're going to be like, Daniel, I can't be looking at the 15-minute chart. I'm with my family all day. I've got a full-time job. That's no good for me. And obviously that makes total sense. The best time frame to look at these statistics on are the time frame that you trade, period. So whether I primarily look at this on a 1-minute chart is not meaning that it's the best time frame. It's because I'm a scalp day trader. Okay, so the best time frame is kind of an open answer, because there is no best time frame. It's the time frame that fits you. That's the best time frame. So that was one question that I received quite a lot of people asking me, what time frame should they be trading this on? And the answer is, trade it on literally the time frame that works for you. So if you are a swing trader, then you can be looking at these kind of statistics on like a 4-hour chart. Okay, 1 4-hour, 1-day chart. You could be looking at all of this on. Obviously, you're going to see delayed. That you might have potentially missed the move on these time frames, but nevertheless, if that's the time frame that you trade off of, then naturally that's going to be the time frame you concentrate on. But we have a few nice examples here of actual imbalances, and we're going to start with trap traders, because that was the way that we got this move up, in my opinion. We obviously had that move to the upside, which then caused that little bit of a cascade almost downwards today. Okay, so we had this fling to the upside before coming back down. Obviously from around 550 all the way to the monthly, okay, or around the monthly here on the Bitcoin chart. If we just load up, actually no, this is something that I would like to start. I'm going to start a new chart here, because another thing that people were, oh god, don't like it when it looks like that. Let's make a copy, and I'll call this Imbalances. We're just gonna, it doesn't matter. So what I want to do is talk you through the process of what we're looking at. So we're just going to delete everything here. And so this is the way that we approach imbalances, okay? Because obviously the way that I trade with imbalances is off of my reference levels. And what do I mean by reference levels? I mean the levels that I'm primarily trading off of. So if you're in the champions group, you'll know I haven't taken a trade over the last 48 hours. And for me, that's a long time, actually. And it's because I've not seen any high probability setup. So we have to say to ourselves, is there a high probability setup here, or am I just trading to trade? And you never want to be in that scenario where you're just trading to trade. You have to view this honestly. If you view trading as a hobby, you're probably going to fail. I truly think that you have to view trading as a business. Like, this is, you should view it as your primary source of income. Like, this is make or break. Like, there's no kind of, I'm going to dabble in this, I'm going to spend a few, an hour a day, or there's no, I would just personally view it, you cannot view this as a hobby that you're just in it to have fun. Okay, you really got to be in this for proper, being really, really serious about trading, because otherwise I think you've got the wrong attitude, in my opinion. So with that said, like, you're not here to take these random, really poor trades. You are only going to be taking the best trades, okay? And what do I mean by only take the best trades? Only take the most highest probability trades. It means only taking a trade when something hits a really important for you reference level, okay? So obviously in trading, you should have a rule set for yourself, okay? So you should have a set of rules that are designed to stop you really taking these poor setups, okay? So your rule set, for a really simple rule set could be something like, I'm only going to take a trade when I have a 618 Fibonacci with a weekly confluence. When they're on top of each other, I'll take that trade every single time. Maybe you only have that one setup. And unless that happens, you never take a trade, period. Okay. So once you've had as kind of, once you've acknowledged that you have some kind of basic rule set, obviously you need to mark up your chart here. So what we could do really simply, is, let's say that we just mark up this chart and we have like we have a CC down here. We could say, okay, in top of this, we have like this bit of like an order block going on in here. Okay, so on the 1 hour chart, we're looking at something along these lines. We could maybe try and make this a little bit cleaner and just use this little block. Okay. And let's say that we've identified this. Again, I'm not going to say that this is an amazing setup or anything like this, but let's just pretend, for the sake of education, we've identified this as our setup, and this is what we're looking to take. And we say to ourselves, this is in our rule set. We're always going to take these trades, and let's just say, again, for the sake of an example, that we also have a weekly here. Okay, so obviously this is just made up, but for the example, let's say we have this as our confluence region, and we're saying to ourselves, right, we're going to trade this, okay? And obviously I'm going to get to the imbalances in a second, don't worry. But, once you've identified your setup, then you're either going to be, let's say you're waiting for this for the longs, and on the shorts, let's say that we have a load of confluence up here somewhere, okay? And this is our weekly resistance where we're going to take another trade, okay? And we'll say that's our weekly up there. So basically, we are then waiting. We're waiting for price to move down to our confluence where we're going to long, or we're going to wait for price to move up to our confluence where we're going to short, and everything in the middle we're not trading. Okay, and you got to be really, really patient. If you've got a particular set of rules, and obviously, scalp traders are going to be in here. They can trade it if they really want to, but if you're staying particularly strong to your set of rules, then you could say that you're only interested at longs when you get, the heavy pullback to support. You're only interested in shorts when you get the rise to your confluence region, and everything in between. You have to have the patience to say, what, I have the self-control here. I don't need to be trading this, and if I am trading this for the sake of boredom, then I'm totally got the wrong opinion on trading, and I'm going to lose money. The biggest thing that I can emphasize here, a little bit off topic, I realize, but nevertheless, like, honestly, you got to view trading as a business. So obviously every business starts capitalized. They start with, running through like money management, which is obviously under risk management. They start their trading, people are not going to be buying, essentially, if this is the stock that you're looking to buy, and let's say that you're selling a car business, if you've got a general influx of supply and demand, then if you can wait for the discount, if you let's just say, let's say that you could wait for your, a discount to buy in more stock on the cars if they're selling well, but you want to wait for the discount. Okay, and then you could try and sell them off at try and get them off at a faster speed. I'm not sure where I'm going with this car example, but you try and get them off at a faster speed as price increases for an unknown reason. But then when price is in the middle, you're less interested, unless somebody's actually actively trying to buy a lot of cars off you. You're not just going to pile on loads of stock, are you, at a fair price? You're going to try and buy it at a discount, sell it at a an above average price. And while it's in the middle of the range, where we can say here, this is only short-term time frame traders. Like, if you're a swing trader and you've taken a trade over the last 48 hours really, then you have to say to yourself, like, I would say anyway, this is not a time where swing traders are getting involved. Swing traders are getting involved at the lows, at the highs, and everything here is for day traders, period. Like, the short-term time frame traders are the only people that should be trading right now. Okay, anyway, once going back to imbalances, let me just take a drink really quick. So with the imbalances then, once we've worked out your reference areas, the reason why I went through that starting bit, because we're only looking at the imbalances when it hits a reference region, because a lot of people were asking me, questions of like, well, just kind of like questions like, they were giving me charts of these imbalances, but if it's not at a reference point, and the reference points are confluence regions or levels that we've got marked out, then you're not interested in the imbalances. So let's say that you had no interest in trading price action, and you're down here on the 1 minute chart, and you're looking at imbalances in this section, and you're like, oh, there's a lot of buying imbalances in this point. It really doesn't matter. There's going to be buying and selling imbalances in potentially in all the areas of the charts. But the only time you're interested in this is when it hits a reference point, okay? So when it comes down where you're looking to buy, when it comes up where you're looking to sell, that is the only time that really I'm going to be ever looking at for the imbalances. I don't care if there's imbalances forming at places where I'm not interested in trading. So that's really, really important to acknowledge. And I think the majority got that, but anyway, so what are we then looking for? So as price comes down to our weekly, as you'll have heard me say many times, I don't like to preset bids necessarily. And again, this is context dependent. There are times where I'll preset bids and I'll just have a bid wait and I'll go and walk away, and I'll come back and get filled, or I don't get filled. So there are times when I will preset. But if I'm at my computer for the whole day, then I would personally prefer to not preset bids, and I'll wait for the reactions. And what do I mean by waiting for the reactions? Well, what I'd want to see is price come down to my reference area where I'm going to get an alert, where I'm going to be ready to trade. And then I'll kind of look for, are we seeing absorption at the lows? So what I mean by that, and again, this is where we're going to flip over to our charts, and we could say this is the example right now. So let's say we've come down to our high reference region and we start to get this sort of rounded bottom. Okay, so rounded bottom, grinding price action. What would we want to see to say, okay, this is a good buy? And this is also going to include that you don't need to wait for the market structure necessarily. Again, there's two aspects of this. Okay, there's two aspects. One is really aggressive, and one is waiting for a step of confirmation, isn't it? So the first step is going to be really aggressive buying based off of the absorption. And that would be seeing a rounded bottom like this, okay, rounded bottom like this, and you're going to want to see really heavy negative delta into these lows, okay? So again, you're going to have to be looking at averages, okay? So again, this is the thing, like trading is not so like quick and simple all the time. You do have to put in a little bit of work if you want to do it kind of well. But again, you're going to have to do a little bit of work working out the averages. And I'll give you a little heads up that Exo charts are going to be implementing this. I spoke with the developer, and he's going to be adding in how long a new candlestick takes to form, and then the average of over the period. So this is going to be amazing, because we won't have to, or I don't know how many of you do it also, but I spend quite a lot of time in the morning working out what the average has been. And it's going to be a massive time saver. So this is literally just the best. But basically, we're going to be able to see averages and data essentially. So instead of for example here, if I wanted to know how we approach the lows, I could look at the last 3-5 times we've approached those lows, and work out what see how much general volume we're approaching the lows on, and then get like a medium of this and see the average when we approach those lows. So what I would generally want to see, if I'm looking for absorption, I'd want to see a lot of heavy volume into those lows. Okay, so I'd want to see really heavy volume down here. And what I mean is a lot of heavy volume in the selling department. So I'd want to see a lot of really heavy negative sells coming on here. So really negative delta with very high volume. Okay. And that's showing to me if there's a lot of heavy selling down here. Okay, if there's a lot of heavy selling down here. So we're seeing a lot of selling imbalances. So selling imbalances is obviously when we set up a percentages, which is generally between 400% and 61.8%. Okay, if we're seeing a lot of selling imbalances at the lows, but price is not breaking down, then that's showing us a bigger trader is sat absorbing all of those sells. Okay, and we generally say that the bigger trader is sat with limit orders. Okay, so if you're seeing millions upon millions of market sells into a level which is your reference point, you're expecting a reaction off of this, and then you see evidence. So this is the beauty of obviously footprint charts and imbalances. It's actual evidence. It's no longer a case of saying I think price is going to bounce off of this. Okay, so this is the thing. You might wonder why we have this is kind of off topic, but it's not really actually. So let's say you put up a 618. And you take 10 trades off of the 618, and maybe you have a 40% win rate, because I don't think it's actually a good idea to buy every 618. But let's just say you do, and you buy every 618 and you have a 40% win rate, and you say to yourself, oh man, I've been buying every CC that has come along here, and I've got a 40% win rate. But when I see Daniel trading, he showed me, this guy's trading with like an 80-90% win rate. How is this possible that every time I buy the CC I fail, and every time Daniel gives examples, he just keeps on pulling out these crazy examples? Like, how is this possible? And obviously, the main primary reason is that I'm waiting. If I'm taking a trade, I do like to see this level of confirmation. And again, this isn't 100% guarantee, but I can almost, I can almost say in my personal experience that it would double a win rate, because you're no longer trading off of hope. You're no longer well, I guess hope's not the right word, because you've obviously got a technical confluence there. But instead of just lining up your confluences and thinking, right, this is it, you're actually seeing evidence that there is a bigger market player alongside you buying into this and supporting your thesis that this is going to hold. So trader number one lines up all their levels where they buy every 618. They get a 40% win rate. You know, you can be profitable with a 40% win rate. They might be content. I would come along and say, you know, look at the imbalances, look at the footprint charts, and you can turn that 40% win rate into an 80% win rate. But instead of taking 10 trades, you're going to be taking 5 trades. So you're going to be taking half the amount of trades, but you're going to be doubling your win rate. And I think that is a really good, I think that's a good thing. So, so basically what would we be looking at down here then? So in the example that we're going over right now then, so we can be looking at this on the XO charts. And again, I'm just going to take a drink. Okay, so what we looking at here? We want to say to ourselves, are we seeing absorption at these lows? Okay, or are we... is this just a low volume and we're going to continue to head down? Okay, and again, for this you are going to need to have done some technical analysis. So looking at this alone is not helpful, period. So you can't, well, yeah, I'm going to say that you cannot really just load up this and start trading. I would always do some other form of technical analysis, and by that I mean just like loading up your chart, doing some technical analysis, such as, you know, putting on your channels, putting on your monthly levels, you know, putting on your Fibonacci levels, you know, some base technical analysis. And you could say that your reference level at the moment is clearly the monthly, isn't it? So our reference level that we could have said that we've been waiting for the last literally 48 hours, you know, is around this monthly, and we were not interested so much in trading up here. The trade, you know, what I was saying anyway, the trade for me was going to be a long if we could really come down, hit a monthly, and you know, that would be a long, okay, and a short for me would have been, you know, a push up to around 9,800. So we're coming into the scenario where I'm more interested in a long. And again, hadn't preset any bids here, and I didn't actually get filled on any bids. I didn't have any set preset, I suppose that's why. But you know, I'm still not in a position at the moment. And what we're looking at here. So let's come over to the chart. So to answer the question, are we seeing absorption? Until XO charts really release the averages, you do have to work out yourself. But I do know that this is going to be coming really shortly. But let's just come up to a higher term time frame then, and just do this in the quickest way possible. So we can say on average over the last, going to have to come up a higher term time frame as well. So really, when we kind of approach these lows, this is on around a 4-hour chart. We can see, you know, again, this is a bit too high a term time frame that I do it on, but for the sake of ease, we can say 900. You know, let's just say 900 and just say 900 million. We'll round it down. Then we come and approach this low, and we're going to say 700 million. And this time we're approaching the low of a local range. So obviously the context is different than these lows, I know, but nevertheless we're seeing this on 400 and, you know, let's just say 400 million. So this time obviously the volume is decreasing, but also that the way that we're going along in this range, okay, the way that we've gone along in this, the volume has also been tapering. So you know, that's kind of to be expected, I would say. And also the thing that backs this up, and again, this is like another form of technical analysis, you could say it's kind of expected that Bitcoin is also somewhat, as it's kind of correlated with the S&P right now, that when we see the S&P also in consolidation mode at the moment, it's no real surprise when you look at the UK stock market consolidating here. And then you look at, you look at gold consolidating here, and then you look at the S&P consolidating here. It's no real surprise that Bitcoin is also kind of consolidating here as well. So that just adds to the thesis that, you know, the wider volume is going down because everything's consolidating. And this is obviously consolidating for a bigger move to the downside, or consolidating for a bigger move to the upside. But nevertheless, we can say it's normal for the volume to be going down here. We're expecting lower volume because you're going sideways, and the longer you go sideways, you generally taper off in the volume, and then you get the big, increase as you get the break of that consolidation range, you know. So nevertheless, you're going to want to see what your average is here, and I would generally be doing this on a lower term time frame. But nevertheless, what we can be saying is, in this region, we're on a lower than average sort of volume. Okay, again, 4-hour, but you know, we're just going to stick with it. So we can say here that this is a low volume break of the level. So if I want to see absorption, I want to really be seeing an increase in volume, if I'm honest. So I want to see quite heavy selling into a low, which is not breaking down. And I would say, in my opinion, this is at the moment not so heavy selling into the low. Obviously, in relative terms, locally, you could be like, oh, there's 8 million here, 6 million here. This is actually really low volume. Okay, this is a low volume, even for this, where we've been going sideways. I mean, if you zoom out here, you can see the colors are obviously light equals low volume, dark equals heavy volume. Okay, so you can see, as you saw your breakdown was on heavy volume. Okay, and then as you've gone sideways here, you see how the volume just is like so light. Okay, so the boxes are really light, which is just simply indicating really low volume. So what I would prefer to see is really heavy volume into this, obviously really heavy negative delta down into these lows. So in my opinion anyway, at the moment, this is not really absorption so much. This is just really low volume. So I wouldn't view this as an edge. I would say there's no edge in trying to buy this at the moment. Okay, for me, it's not hit a requirement. Okay. Another thing that I'd be looking at in terms of aiding me with looking at absorption is going to be looking at the CVD. Looking at this, are we seeing CVD divergences, which is a way to aid you with looking at absorption. You don't really need the CVD, but it's only going to be helpful, I suppose. So again, here you don't see any evidence, because you see a low here, and then you make a new low here, and you also make a new low on CVD. So and then obviously you're making a higher low here and then a higher low on CVD. Okay, if anything, you actually made a much higher high here and a lower high here. So this could be bearish, but this is not so big for me. But basically, though, what I'm saying is, firstly, the volume is really low. So that's one reason where, if, let's say I was looking to buy this monthly, it hasn't hit, let's remember that, but let's say we had hit the monthly and then I saw this as the reaction, I'm not going to buy it. So let's say my alert was set for $9,376, and my alert goes off, and I'm thinking to myself, right, I'm going to buy this level. I've been waiting for this level for a week, and trader number one buys this. They buy it, they walk away, they set a stop loss, they set a take profit, they've walked away, they're in the trade. I'm going to see this, I'm going to have my alert go off, and I'm going to come over to the screen, exactly like I'm doing right now. And I'm going to say to myself, right, my alert's come off, I've got to the level I've been waiting for a week. Am I going to now take this trade, or am I going to leave the trade? Am I going to say this actually isn't a, I've been waiting for this level, but if I don't see any evidence that people want to buy it, then I would say to myself, well, maybe I can get a better entry, sort of thing. And obviously sometimes this is going to equal that I miss a trade, and it could go up, and the guy that kind of just set his entry and walked away, well, good for him. He made some money. But I would say, obviously, with this kind of discretionary kind of trading where we are looking for data, that doesn't mean 100% every time we wait it has to do what we think. Obviously, someone could come in 10 million market buy and we go, sort of thing. I don't want to say this is a foolproof 100% guarantees, but all I would say is, at the moment, if I'd had my alert go off right now, I would not be buying this at the moment, because I see no CVD divergences. I see no high volume. There's just no sign of absorption at these lows. Okay. For me, there's just not enough here. Okay. So to make it really, really, really clear what I'm looking for when I'm looking for absorption, first I want to see high volume. Okay, so if we had continued with this sort of volume, that was unlikely, but I would have wanted to see more than average, and this is really low, really, really low volume. And on top of that, you see the negative delta here. So your biggest negative delta there is 5.2 million, but it's surrounded by like a 4.2, 3.4, 4.9, 3. The negative delta is not really heavy either, is it? And another thing that I'll be looking at is obviously your CVD. So the CVD here you start the range basically at 1.47 billion negative CVD, and now you're on 1.48 negative 1.48 billion CVD. So I mean, this is during a period of sorry, I'm gonna have to go back to this chart and just look at this. This is during a period of 4 hours 15 minutes. So nearly coming on coming on nearly 5 hours, there's not been, and I think it should be screaming you in the face, there's not been any sign of absorption, because the volume is low. People are not really aggressively selling this, or if they are, there's people aggressively selling and there's people aggressively buying. And there's just no reason to jump into this trade right now. And what I would say, so how would I say, okay, where would I then be interested in trading this? And my interest in trading this is going to be, okay, if we can you do have the potential of trap shorts down here, because when you look at this, you do see there's 5 million, 7 million, 3 million, 1 million, 3 million, 2 million, 3 million. So you do have a lot of shorts at these lows. So how do we have the option? We don't want to buy now. I would say buying now is a really bad idea, but we could get interested in a long if we can try and trap the shorts. So how then do we move on to this of trapping the shorts? We want to get back above a reference level. And again, your reference level here is going to have to be more locally, isn't it? And the way that I was looking at my reference levels earlier, and if you're in the Champions chat, you already know the reference level. But, basically what I was looking at, again, this has actually changed now. So I was looking at 9,425. That's the level I gave you, literally like 4 hours ago. I said I'm not buying until if price claims 9,425. Unless it does that, I have no interest in buying this. And it's simply because the volume was ultra low and there's just no reason to even attempt to try it. And as you can see, the reference level that I gave you was, I'm going to just type it in here, 9,425. Okay. So this is a level I'm saying to myself, we claim this and then I'll get interested in buying, because I haven't seen any evidence of absorption here, but I could see evidence of trap shorts, and my trap shorts would be down here. And then what we would be looking to do is, if we get back above my reference level, I'm looking to get into a long and trade it back up to the highs ultimately. Again, I might have a take profit somewhere in the middle of this section, but ultimately I'm going to be looking up for the higher the range, That would be my goal with that trade. And again, what would I like to see upon taking my reference level? Upon taking that reference level, I would like to see an increase in volume. So I'd like to see, coming back up to maybe the 70 million levels at least. I'd like to see that sort of volume coming in upon taking the highs. And then I would like to see a lot of buying imbalances form on that. Okay, so then that's showing me, okay, we've claimed my reference level on an increase in volume. Okay, a lot of buying imbalances, which, obviously is going to give you a very high positive delta. So that is the ingredients and the recipe that I would be looking for here. I can say to myself, okay, I'm not going to buy here. I've seen no evidence of buying. So if price falls down, guess what? The trader that bought here, trader number one that bought here with his preset bids, just lost money. I see no evidence and reason to buy right now. So I could be in an advantageous position of essentially just waiting for a lower price. I lose no money by waiting for a lower price. Okay, and scenario number two is that we claim my reference level, which I'm waiting for, and then I see evidence of trapped shorts. Okay, especially if we get the uptick in volume, especially we see net longs opening, open interest increasing, and a positive delta with the buying imbalances. Then I would say that the probabilities then of buying upon that momentum, the probabilities of me winning this trade have. Again, I don't have you can't say it exactly, but let's just say that our probability is double, because instead of, we actually have a lot of statistical advantages and actual evidence that this trade is very likely going to play out. Okay, it's extremely, it's just like we've seen the evidence. It's no longer anymore a thesis of what might happen. We're actually seeing a reason of why it's going to happen, sort of thing. So. That's an example that I can give you here of like absorption, what I'd be looking for, and then the imbalances come into play. So what I would want to see is obviously heavy selling imbalances for really at the lows, but I would argue that you don't have this at the moment. It's more you have the potential of the trap shorts, but it's just not happening at the moment. So scenario number two would be when we get these wicks, and we have another really good example of this, and this was the example earlier today. So around, if you want to look at yourself, for 2:15 on the 17th of June. Okay, so I'm going to go over this as an example, and why did this equal a really quick, relatively quick decrease in price over the next few hours? Well, in this example, you have what I call trapped longs in a swing failure pattern type style. And if you know, we have been going sideways then for the last, few days. Okay, we've been going sideways. And you'll know in the group, literally around 2 p.m. today, 2 p.m. I think it was around 2 p.m. to, I don't know, I can't remember the exact time, but before this wick to the upside, I wrote in the group saying, I'm expecting a stop run to the upside. And I was obviously saying around the weekly level. So I was looking for a stop run to the weekly. Obviously, the strength behind the stop run wasn't as big to get you up to the weekly level, but nevertheless, we did get that stop run like I was envisaging. It never come up to the level I was waiting for, so I didn't actually get filled. But nevertheless, If I was at my computer, I would have liked to have got involved in this one, but I wasn't actually around, so I never got an alert go off. I didn't get to my computer in time, but that's part of the trading, I suppose. But nevertheless, what you saw was a really local, so high swing failure pattern of the high. So why, if you're at your computer, again, this is one where you're going to have to be at your computer. But nevertheless, like, where can you get involved in this trade? And look at this. So this is an example of trap to longs into a swing failure pattern wick. So here's the wick. So there's the candle close. All of this is the wick. In the wick, you're seeing 1 million, 1 million, 1 million, 1 million, 1 million, 2 million, 1 million, 1 million, 2 million, 4 million, 1 million, 2 million, a few 100,000, and at the very, very, very high 1.4 million. So this is an example of a swing failure pattern, okay, swing failure pattern wick, where you see a lot of aggressive buying into a level, which then closes back down below. Straight away, this is instantly, you'd be going into a short position at market. This is a scenario where you have to be getting in at market, and we'll go down to a lower term time frame. We can sort of look at it. Again, I didn't actually trade this morning, but I can still give you, a nice example. So we'll go back up to here. So this is what you'd have been looking at in the time. Okay. So again, we're on the 1 minute chart here, but we're going to have to up these tick sizes. So ugly. This is the one thing I do not like about XO. I do think the scaling is a bit horrible. I don't really like the scaling so much. So let's just take this off, and let's just take this off. So, again, so we saw the evidence of the trap longs into the high, okay? And then as soon as you see the trap longs into the high and you get back down below your reference levels, it's market short. Your invalidation is above the high. So you can have your stop loss, a hard stop loss set above the high. Because if you're trading off the thesis that you have trap longs, where if price goes back above that high, they're no longer trap longs, and your thesis, your trade setup was invalidated. You put your stop loss always at invalidation. You don't need to have a wide stop loss if your invalidation is really close. And in these examples, the swing failure patterns, they're good trades because the invalidation is always so close, So upon seeing that stop run this morning, okay, if you were at your computer and you sort of see the buying imbalances, so you can see the buying imbalances here upon the high, heavy volume into the high, okay, literally 1.5 million at the high. And then you come back down, and this is the beauty of the imbalances, selling imbalances as you break that level. And they're big imbalances. So 1 million sold at market, nearly 1 million sold at market, 1 million sold at market, 1.4 million sold at market. You see these amount of millions, well, again, this is a low volume range. So, if you're at a really big reference level, then you'd be expecting like 5 million, bigger amounts. But, again, the context here is important. But nevertheless, you see the buying imbalances upon breaking the high. You see, trap traders up here at the highs in the millions. And then you see these selling imbalances coming off of that swing failure pattern. Like, you've got no reason to hesitate. It's kind of one of these that if you hesitate, you're going to miss it. So you have to just, without overthinking it. I mean, the setup is clear as day. If you overthink it, then why are you overthinking it? So it's clear as day. Like, this is the setup that you got to be shorting. You can just get ahead at market, and you can see that that's what happens here with 1 million at market, 1 million at market, 500,000 at market, 1 million at market, and then obviously that brings you overall down. You come in lower high, lower low, lower high, lower low, lower high, another sell off, okay, which then brings you into a lower high and another low there, and then that's obviously brought you into your consolidation here. So you short as soon as you get that swing failure with the evidence, and you've just done a really, really, really good day trade. To be honest, like that would have, I didn't take it, but I'd have been more than content with that sort of day trade. And this is not a difficult trade. You just have to have your alerts in the right place. But that was like an evidence of trapped longs in a swing failure pattern. And then this is an example of absorption of what you could be looking for absorption. Okay, and on both of these, you want to see how the high volume. So you want to see high volume in the wicks. You want to see high volume on the consolidation. So I guess the thing that we're really looking for here, isn't it, is high volume. And we can say to ourselves, if we're not getting high volume, then why are we trading? I've said it before, and I'll say it again. If volume is really low, I actually don't want to trade. I just don't want to trade. It's as simple as that. I'd much prefer to go. I could just trade something else. So lately, I've actually slightly come back off of Bitcoin over the last, really the last 48 hours, and I've been trading more the stock market. Oh yeah, the stock market is obviously in a small range as well, but actually the volume is really high in this range. So It's easier to fill really big positions and trade the market, whereas cryptocurrency has been very low volume, it's as simple as that. So basically where I'm going with this is when we're looking at all of this analysis with the imbalances, we want to see the volume high. We want to see high volume in the swing failures. We want to see high volume in the absorption. And if you don't have that high volume, then I'd just say to yourself, why are you trading? I would say to myself anyway, Daniel, what are you doing? One of your rules is that you want to see high volume on these moves. And if you're not getting it, why are you even trading this? And I would slap myself on the wrist and say, appreciate your rules. You're trading this out of boredom, go and do something else, because you're just throwing away money for the sake of throwing away money, really bad thing to do. If you're a business that throws away money, well, you're going to go out of business fairly shortly, aren't you? You have to be taking it really, really, really seriously. And if your business turns into a charity in the stock market, basically you're a losing trader and you're giving it to the winners, and that is definitely not what you want to do if you want to be in this for the long term. So that was today's stream, I suppose, where I've gone over quite a few examples there, and I feel I've covered the majority of the questions and the confusions that people had. I hope so anyway. Any other questions, let me know in the in the YouTube chat now, and I'll answer your questions, okay? But yeah, this was nice actually that we had these nice examples. I actually really wanted to see a move here, and we could have gone over a live example, but I wasn't fortunate enough for that. But I hope I've explained it well, and if I haven't, then you can ask some questions live now, and I'll get to your questions. So let me clear that up, and let's go over the questions then. If you are buying the bottom, your first take profit will always be a higher percentage if you bought than on the center. If you're buying the bottom, your first take profit will always be a higher percentage than if you bought the center scalpers area. Well, I guess it's kind of, I would say yes in terms of, I would say it's likely if you're buying the bottom of the range, then generally you're going to be targeting the top of the range, aren't you? Okay, obviously you got to take profit in the middle of the range, like the point of control, but yeah, generally speaking, if you're buying the bottom of the range, then you're going to have a bigger percentage return than the guy buying the middle of the range. Yeah, and this is why we say the big term time frame traders, or the bigger accounts, they're generally going to be getting in at value. So when the price comes to the lower of the range, that's their opportunity to buy. When the price comes to the higher range, that's their opportunity to sell. And Bitcoin is in a really nice example of this, like literally period. I couldn't give you a better one. You come up to the high of the range, this is viewed as expensive or overpriced. People up here are selling, and where's their target? Back down at the lows. Comes down to the lows, people view this as a discount where they're selling. They want to sell back at the highs, but you can definitely use the equilibrium of this as a take profit. But obviously if you're buying here and your take profits here, well, you're going to be looking at a 4% gain, whereas if you're buying the actual lower the range, you'll have already hit take profit 1, but your overall target is going to be about an 8% gain, isn't it? So you're seeing about a 40% increase in difference there by being patient, waiting for the lows or the highs, if you see what I mean. Do you look for imbalances when scalping, or just when price hits big weekly level? Yeah, so really, so this is the thing, I'm only, so I the way that I trade has kind of changed over the last 6 months. 6 months to a year, since I kind of had this group, if I'm honest. The way that I actually day trade is a lot different than what I used to trade like 3 years ago. And the reasons for this is my time is actually a lot more scarce for the actual scalp trading. I'm not going to lie, like where I could, 3-4 years ago, I could literally spend my whole day doing nothing else than scalp trading. I just don't have that. I don't have that time anymore. So, I am a lot more picky on the trades that I'll take. I can't spend literally the whole day scalping anymore. I'm doing other things, So, yeah, I'm not really scalping down on the 3 minute time frame. Like for instance, the Bollinger Band strategy. That is a strategy that requires the whole day full concentration. You can't be going out at half the day, you can't be every 5 minutes answering at somebody's question or going off and making a video and things like this. It requires full concentration to scalp trade like that, and I don't have that time sort of anymore. So the way that I've traded has definitely changed since I have the group, if I'm honest with you. But yeah, so basically where I'm going with this is, I'm not trading like the Bollinger Band strategies anymore. So I'm not really looking for these imbalances. I'm not taking trades unless it comes to a big reference level that I'm waiting for. And if something doesn't hit a level anymore, I'm just not trading. If it's as simple as that, really. I only want to take the best trades. So I'm not actually interested in trying to sculpt these tiny moves anymore. Whereas and I'm not saying that that's not working or I couldn't make money doing it, but it all comes down to time, really, doesn't it? So, yeah, I'm definitely only really waiting now for the quote unquote higher probability trades, because I when I was trading those Bollinger Bands, I had a lower win rate, but I was taking like 100 times more trades, so at the end of the day it was a good run. But so yeah, to answer this question, I'm really only waiting it for a reference level. Daniel, would you say we had a nice swing failure pattern on the 15-minute as price wicked through the daily open 59522 and closing below, which led to the sell-off? Yes, I would say that was a local time frame swing failure pattern, and I guess you might have asked that question before I went through the example. So yeah, I would say that was a local swing failure pattern. Obviously, as you know, if you were around in the group earlier, I was looking for the weekly, but I was definitely expecting a stop run before the decrease in price. That's what I was waiting for. It's just unfortunately I was waiting for a little bit of a higher price. That's why I didn't have my alert score for that one this morning. Yeah, I wanted to see a bit more of a higher price, so I didn't have my alert sound out, but nevertheless it was a local swing failure pattern. But yeah, so yeah, that to answer that question, yes, absolutely. If I understand correctly, don't take automatically a trade on CC level, but watch footprints to have confirmation. Yeah, 100%. And this is the thing. So I'm not saying you have to do this. What you have to acknowledge is if you're doing this tactics, so to speak, you have to have time, and this is a luxury that not everybody has. If you do have a full-time job, if you do have other commitments, if you do have a family, and I guess I don't want to say lucky, but I'm in a situation where I can spend my whole day doing nothing else but trading, really. So this isn't I'm in this situation where I can be looking at all these reference levels. I can come down to the 1 minute charts and start reviewing something when this happens. But if you're doing something else, and you obviously have to adjust the strategy to yourself. And I would say that this is definitely helpful, but it does come down to your time commitments, because obviously this is a lot more time consuming. So you don't have to do this by any stretch of the imagination. Like, this is not a requirement to trade as I'm going through today, but it is helpful. But if you don't have the time, then you would obviously just have to preset and trade it in a different way, but yeah. So, but essentially, yeah, this is what I'm waiting for. I'm waiting for the alerts, and I'm coming down and I'm deciding in the moment, like, am I going to buy it or am I actually going to leave it? Because I think, I can see prices likely to go lower. How do you manage to get a clear view on a reference level imbalances and trade it when moves are so quick, i.e. on wicks? So for example, I guess the best example that you can see is this one from this morning. Let's say that you had your alert set at 9,550 previous day value area high. So this is a valid place to have an alert, to be honest. So let's say you're waiting for that alert to go off. You have the alert go off and you see price come down in that wick. You have 1, 2, 3, 4, 5, 6, you have about 7 minutes to get into that trade before the real sell-off starts. So there's no excuse really that you could say to yourself, I've missed the move. If you see evidence of a move through a reference level that you've been waiting for, and you see evidence of a rejection with selling imbalances coming into this, like, there's no excuse not to take the trade. There really isn't. So, how do you manage to get a clear view? I guess if something literally is a massive 1 minute wick and it comes all the way back up, and you could say, well, then, maybe you missed the trade. This is obviously so context dependent. I would say, like this morning's example, there's no way you would have missed that trade. If I'm honest, there's no way you would have missed that if you had an alert set at a level. But if this was a massive wick to the upside and then like almost instant rejection, which brings you almost instantly all the way back down to your monthly level, then clearly you can say to yourself, by the time you have the alert go off, you've already missed it because it's already had a massive decrease in price. And that can happen at times. Absolutely, it can happen at times. But yeah, I'm not sure what to say on that one, but generally speaking, you're not going to see those massive crazy moves because more times than not you're going to see similar to today, where you are at least going to have a few minutes to get involved and see it, sort of thing. So yeah, I guess what I would say is, like, I'm very instinctively making these moves. So it's not like when I see an alert go off, I'm not going to be spending 5 minutes reviewing the situation. I am going to be able to make a decision within 15 seconds of getting at my computer. I'm going to, it's just kind of being a scalp trader. You have to be ultra quick on making decisions, and you cannot worry about the decisions so much. You can't be thinking, you can't suddenly start trying to look at all the data. You do have to have some sort of plan preset. So it's naturally, as you might think, as a scalp trader, you don't have plans and stuff. I don't know, but as a scalp trader, you still are having a plan. You still are ready for what you wanted to see, and then if you see that, you take the trade almost instinctively without thinking. It's and a guy that waits around, especially as a noob trader, as a newer trader, you might get into this situation where you keep missing the trades. And I would say that's through a lack of confidence, if anything. If you saw this morning and there's evidence to take a short, and then you're sat here as prices going sideways, and even here making locally lower highs and lower lows, and you're sat there just thinking, oh man, I want to wait for another increase in price, give me another test of the daily open. But if you're seeing no reason even why there's going to be a retest, then it's through a lack of experience and a lack of confidence. That's the only reason why you miss those trades, in my opinion. And again, that comes with time. The more times you take these trades, the better your plans preset are. The more time that you have actually knowing what you're looking for, then the easier this comes. It's like second nature, almost. Like, I'm not overthinking these things. I just see it, I just take it, and I win or lose at the end of the day. I'm not, I take losses. So, if I take a loss, I move on. What do you mean when you are looking for sales buys in millions and not thousands when looking at the imbalances? Okay, so for an example then, let's say that this was our reference level. Our reference level come up here, and we see 10,000 contracts, 200,000 contracts, 15,000 contracts, 2,000 contracts. This is ultra low volume. There's imbalances let's say here's a selling imbalance, yeah, and there's 10,000 contracts. So who literally cares that there's a selling imbalance of 10,000 contracts? Nobody cares about that, but it's still going to give you an imbalance, okay? Because 10,000 to 900, this is a massive imbalance, isn't it? But nobody actually cares about that imbalance. So what I'm saying in this is I'm only interested in the imbalances. If this was an imbalance of 10 million, well, suddenly I'm interested because there's a really big market short coming in. But 10,000 contracts, it gives me an imbalance, but I don't care about it because it's too small for me to even think about. So that's what I mean by I want to see millions rather than the thousands, because the thousands are going to print imbalances, but I don't care about them, sort of thing. In the volume series, you told us you want to see weakness in a trend before reversal. So you want to see lower volume that is showing losing strength. Now you want to see the volume before reversal. Could you explain? So in the volume series, you told us to see weakness in a trend before reversal, you want to see lower volume that is showing losing strength. Now you want to see low volume before reversal. Could you I really don't understand the question. I'm not sure what you're referencing so much. I wanted to see lower volume before a trend reversal. So you want to see lower volume. Could you... That is losing strength. I think I know what you mean here. So for example, when I took this short back up at the highs. So I think this is what you mean. I'm kind of guessing here. And so obviously I shorted 10,200, and the reason I took that was because the break was on ultra low volume. Okay, in comparison, I was wanting to see 6 billion on the break, and we saw 2 billion on the break, so a fraction of what I wanted to see. So if you break a really big level, and there's you want to see a really big increase in volume, don't you, upon breaking a really big range. And if you break that range on really low volume, then it's only bearish. So you want to see volume increase as you break really big levels to be a bullish breakout. And if you don't get that, then it's a weak break or an exhaustion break, and it's more bearish. So now you want to see low volume before reversal. I'm not sure what you mean, really, because I'm not sure when I've said I wanted to see low volume before reversal. What I've gone over today is the opposite of that. I've been saying I want to see high volume. So I'm not 100% sure what you mean, but yeah, I want to see high volume come in. So absorption of high volume, the wicks on high volume. So I'm not sure what you really mean by this one. Can you do some hindsight examples where price hits support resistance and examine their footprints? I've done 2 today. We could go and try and find something else. So I suppose let's just zoom in here over the last lows. So on these last lows, we can see first thing I'd be looking for is maybe in the time. So you don't have CVD divergences on this. Okay, let's come back and start looking in at how much selling we have into the lows. So we can say straight away 250 to nearly 500 million over these hourly periods. You do have selling imbalances at the lows here. So we can see the lows 7 million, 1 million, 8 million, 8 million at the very low. That's obviously really big. So a lot of heavy selling at the lows here. And then you get bought up on buying imbalances. Okay, so this is a pretty nice example of what you'd be looking for a long. So let's say your reference level here was 8,900. You're waiting for 8,900. You have your alert go off, and then you see this really heavy selling, 8 million selling imbalances at the very low. So you'd have had your alert go off. You'd have seen 8 million come in there, and you get your close all the way back up here. That for me is straight away bullish because you have a lot of trap traders at the lows, and then icing on the cake, you get really nice. Okay, buying imbalances in the millions again. Say 5 million buying imbalances, 4 million, 4 million, 3 million, 1 million, 2 million, 4 million, 4 million. Okay, so you're seeing heavy volume coming in on the buyback up here in terms of the imbalances, and then you do get a pullback here. So you do get a pullback. Okay, but you can see that really this is on decreasing volume. So 68 million, 29, 40, 38, 28, and then a final push down lower, and maybe here you bounce off like a Fibonacci level, or here your point of control candle, and then you move back up above the level again. You take the highs, buying imbalances, 114 million, pretty decent volume, 155 million, but again here you're seeing lots of buying imbalances upon the break, and you do just be getting involved because then you have all of this region as trap traders. You've changed the market structure with a higher low and a higher high, with buying imbalances on taking the highs, your point of control moving up. There's no reason to be bearish at this point, is there? This is giving you a perfect recipe for the long, and you end up moving all the way to 9,600. So $600 move. So yeah, there's a hindsight example, I suppose. And this one actually wasn't so hindsight because that was one that I obviously traded. So I did trade the long down here. If I'm sure you know because you're in the group. And we actually traded this long. And again, so what was the reference levels here? Well, the reference levels for that long was, I literally gave this live in the time. So this was no hindsight really. This was a live trade that I done. We saw the heavy selling into those lows. Okay, so we saw the 8 million odd into the lows. Okay, also it was in the context that the whole world was bearish. I was bullish on the stock market off of 3,000 points. I was, it was all again the context here that we had heavy selling into the lows. We bounced off the old top of our channel. Everything was lining up there. Everything was lining up in this moment for the squeeze to the upside, and I was saying live in the time, I'm buying, I'm long, I'm expecting to squeeze, and that's exactly what happened. And again, it wasn't just like a hunch or anything, like gut feeling. Like there was evidence. I had evidence of trapped trap shorts on heavy volume, and then we come back and we hold a reference level that I've been trading off of for 50 days. This is really big for me. This is big, and then we got the short squeeze. And that was an amazing trade. So I guess that was kind of that wasn't a hindsight because actually made good money on that one, but it was also a really good example. On what time frame would you check for increase in volume in delta or for claim of the reference level? 9425 in this case. So yeah, this is the thing, and this is what I'm going to be getting over in the next few weeks. Like I'm not actually looking so much at time frames. So you can see here, like my I'm for instance here on a volume 5 million chart. So not so much looking at time frames, if I'm honest. But let's say, to keep things simple for the question, and I'm going to be getting over into the more complex stuff in a few streams time. But let's say like, it's not so much about the time frame, it's more about the volume, obviously. But let's just say 15-minute time frame with a 15-minute market structure change. That's pretty good odds, and you can see it. I think at the moment we're still moving down. So let's go down to the 5-minute chart. 15-minute chart, because then you'd have changed the market structure. So you can see on like the 15-minute chart, if you go here, make a higher low, and you make the higher high, well then you've got a 15-minute trend change as well as breaking the reference. That's obviously good in terms of time. Do you think when the opportunity come for 9425 to record it live on Extra Charts Action? Yeah, I guess if I'm awake for it, I can do it. I'm not sure when it's going to break, but yeah, I will record that. I'll be more than happy to do that. So I'll do that as long as it happens while I'm awake. No worries. I will definitely record it. I've got the alert, as you can see. I've got the alert ready and waiting. So, when this alert goes off, I'll start recording for you. No worries. Do you still get your imbalances set to 618? Seems a bit too high. Yeah, I still have it set on 618, and that's because I only want to be alerted to the higher imbalances. For me, it's not too high. Some people are going to be like, oh, you need to use imbalances on 200%. And I'm not telling you have to use 618. Okay, this is what I use. For me, it's not too high, but there are times when I will lower it to say 400%. But the standard's 200%. If you read a textbook, I think they're going to give you 200-300%. The reason I increase it is because I'm trading cryptocurrency, and I just all I can say is what I give you. And so for me, it's not too high. If it was too high, I wouldn't give you that level. Does this theory conflict a bit with the theory on bid-ask profiles, where you want to see large deltas above breakover level? I wouldn't really say it's conflicting, because if you're breaking above a level and you want to see, let's say you're breaking above your level and you see this really nice P, well, that's then giving you really high buying above a level. And that, if you're trading a breakout, that's what you want to see, don't you? You want to see that high, heavy breaking on a breakout. So I wouldn't really say it conflicts. No, I'd say it moves together on the breakouts. You want to see those really nice P, well, not really, you want to see these like, P shapes where you're getting a really high buying, high set, high buying, high volume breaks, okay, which going to give you those P shapes almost. So it doesn't really conflict. No, I wouldn't say it conflicts. To be honest, no, I wouldn't say it conflicts. Cool. So those are all the questions then that have come over to me. Yeah, so I hope that this stream was eye-opening in a sense that you can see exactly what I'm looking for here, and how we're trading it. And yeah, to answer that question, yeah, I definitely am going to record it the next time this comes along. I will. I'll record that one for you, and we'll see how it goes. But can't you see how good it is already? Because imagine you had the bids preset, and like during this stream, we were saying, wouldn't have bought, and we're already down. Look at this. So we're coming down. So like just these sort of things, if the guy that's had his bids preset, he's maybe underwater already, he's going to be agitated, and this is the thing, sometimes it could be a case where you have a really nice rise, but imagine being the guy that preset his bids. Let's say he preset his bid 9,400, he's now $40 underwater, so he's 0.5% underwater, and he might throw away his position before it takes off. How many times have you done that? You had an entry that you've been waiting for. Price spends too long meandering around. You go underwater a little bit and you throw away the position before it actually then increases in price. So many people are going to do that even when they have a nice entry. They'll throw it away through lack of patience in that regards. And I'm not saying that we don't use time stops, because I do, but just think about it. Waiting for these reactions is really, really, really good. Yeah, there you go then. So I think that's everything then that I wanted to cover. Yeah, I really hope that this one's been helpful. I've managed to answer a lot of the questions that people had, and yeah, there you go. Thank you, everybody. Again, if you have any other questions that you feel I might have missed, then just ask them across in Discord. Yeah, ask them in Discord, and I'll answer your questions. So yeah, thanks once again, everybody. I will catch you next week. Next week, we're actually going over the 80% rule setup, and this is because I see a lot of misinformation about this. I keep seeing people in the group talking about it, obviously because it's a really nice trade, but there's so much misinformation about it. It's a little bit hard, and so yeah, I'm going to do that in next week's live stream. So that's obviously going to be a really, really, really good one, because the setup is obviously fully amazing. If you don't really know what you're looking at well enough, then you're probably going to lose money. So, I want to cover that one in detail next week. So yeah, look forward to the 80% trade setup next week. Going to be brilliant. I'll catch you then. And yeah, thank you once again, everybody. Have a brilliant evening and goodbye. Cheers.